Thank you for joining me. I'm Juan, lead trader and founder of Prosperity Trade. In this video, I'm going to discuss Unity. Is it a good investment? Is it a good buy now, or should you wait? Stay tuned. So Unity, what is it that they do exactly? Unity is the world's leading platform for creating and operating interactive, real-time 3D content. They do 3D content, 2D content. They're used by game developers, artists, architects, automotive designers, filmmakers, and others. They use Unity to make their imaginations come to life. Their platform provides a comprehensive set of software solutions to create, run, and monetize interactive real 3D and 2D content for mobile phones, tablets, PCs, consoles, and augmented and virtual reality devices. So it's not a new concept, but they've come into this circle, this game, creating 3D, 2D, and they're kind of like disrupting a little bit by making it easier for independent people that are trying to make games and have ideas and want to monetize. This is where their niche is. So there's other huge companies in this industry, and one of the other big ones would be Unreal, and it's a top choice for the AAA studies actually. Both Unreal and Unity, both of them do 3D, both of them 2D. In 3D, I would say Unreal definitely has an edge, as in terms of like graphical fidelity. They're way more advanced and they have better 3D capabilities than Unity. You see, Unreal hit a home run with Fortnite. It's a massive game and they make massive income from it. But Unity comes in, and for the average person just starting out, wanting to make a game, wanting to try to make money, they have an idea, Unity is really a better choice. Unity is better than Unreal in 2D, in virtual reality, in augmented reality. They both have multiplayer. They both mobile, for mobile users. Unity is definitely does have an edge. If it's a game like Fortnite, then you're gonna want to use Unreal. They both use coding. The advantage with Unreal is they have kind of like this virtual scripting, and it's a great alternative to coding. But the overall market for gaming has just been increasing year after year. There's just a higher demand. In 2018, the worldwide gaming market was about $138 billion. In 2019, it was about 152 billion. 2020, 164. 2021, 178. And they're predicting in 2022 that it'll be around $196 billion. So there's a lot of money to be made out there. I think there's enough money for everybody, and everyone's going to have kind of like their edge. So the products they have Create solutions, and this is used by content creators, developers, artists, designers, engineers, and architects to create interactive, real-time 2D and 3D content. Their products include custom scripting tools and high-definition render pipeline for developers, graphics, animations, and audio tools. This is being offered through monthly subscription. You can go on their website and see their prices. They do offer a free service, and if you make under 100,000, it'll still be free. Then they have the Operate Solutions, which offers customers the ability to grow and engage their end user base, as well as run and monetize their content with the goal of optimizing end user acquisitions and operating costs while increasing the lifetime value of their end users. Their monetizing products, Unity Ads, Unity IAP, in-app purchase, helps developers to maximize their revenue potential of their content. And this is the edge that they have right now. You know, if you have an idea for a game, you know how to use it. I went on the website, I was playing around. I'm not into the field, but so it's a little bit difficult for someone who has no experience. But I watched a few videos on their tutorials, and there's plenty of resources that if I wanted to kind of like dedicate myself to it, I could learn just going from zero, which I am. I'm a level 0 person when it comes to game developing. But I gave it a test. Like if I was going to be a user, if I was going to be a customer, I saw the potential to being able to learn and being able to potentially make my own game. So that's good that they have enough tutorials. They have enough things for beginners to be able to create their own game. Their CEO, he has a lot of shares. He's highly invested in the company, which is something you always want to see. There's a lot of smart money too invested in there. I will say that the field itself is becoming a little bit more competitive. So before we look at the numbers, right now they have over 2 billion users average monthly, which is a lot. Their primary revenue comes from create and operate solutions. Create is, like we said, it develops real-time 2D, 3D games, and they estimate that they will get about over 2 billion to 16 billion streams in 2025, and over 50% of mobile and PC games on Unity. Unity is also likely to benefit from like the just augmented reality and virtual reality in the next coming years. It's a $17 billion market, and Unity is definitely going to be in there in that market. Okay, so talking about their financials, Unity revenue in 2019, they made over 500 million. In 2020, over 700 million. This year, they're on track so far of making over 800 million. But the cost of revenues definitely increased. So it's cut into their gross profit. Their operating income has increased. So they're still not a profitable company at this time. A few months ago, they were trading at a very high valuation of 38 times price to sales. Their gross profit margin was about 76%, which is average. 70% is about average in their industry. Their price to sale ratio was about 34. Return on asset was a negative. Return on equity was negative. Still not a profitable company. So if you're a person that you consider yourself to be a value investor and you're worried about, am I getting a good deal at this moment? Right now, it's not good for a value investor. So just keep that in mind. If we look at their balance sheet, they do have about over $2 billion in assets compared to over 600 million in liabilities. So that's a good sign. They can, be unprofitable for the next few years and still have the cash flow to keep themselves afloat. Upside, we're saying that in 2021, the revenue growth is going to go from 30% to 2022, 26, 26, 26, 24, 20, 20, 20, and increase that way. Base just kind of 2020 and down to 18, and revenue growth downside 18, 18, 18. I think that they're going to be somewhere in the middle. The base, it's going to continue to grow. They had a big growth spike this year, but I think it'll kind of average out to the 20s, 18% growth. Their cost of revenue, they need to drop that to be profitable. I don't think, and this is why I wouldn't be bullish on them yet. I wouldn't put upside. So the industry average of this industry cross growth is 10 to 20%. They're above that at the high side, 22%. So this needs to go down. If they get that down to the industry average between 10 and 20%, then that's definitely going to help out. You see, in 2020, R&D was 52%, with the industry average of being 25%. As they become a bigger company, I think that will go down. So I'm okay with any of these, maybe 20-something%. When we put downside, we're saying that we believe these numbers are what's going to give us the evaluation. So we're saying that the revenue is going to go from 20%. It's not going to go above 20%, stay down to 18, 16, 14. And that's very possible. That's the risk with this. That's very possible that other companies come, that other companies start to compete, that other companies mimic what they do and they start doing it better. So those are the risks. They're not like on an island. They don't have like a major moat. I would say that no one else can do what they're doing. If we think that in the next 5 years, their revenue is going to drop to below 20%, if we believe that they're not going to get a hold of their R&D expenses and all those things, the downside, if those numbers are together, is a potential negative 42%. If you're moderate like I am and you're saying, yes, they're going to continue to increase their revenue because they have an edge on the competition and no one's going to be able to compete with them in their space. I'm talking about the brand new game developers that they just want to get started off. Why wouldn't you use Unity over anyone else? It's going to be easier. It's going to be free if you're making less than 100,000. There's a lot of edge right now for the base user. So that's where I say this is an intrinsic value for me, $99. That to me, if it drops below $90, I would buy then. Or if it drops back below between 80 and 90, to me, that's a buy. Right now, it's not a buy. If you're bullish and you think that they have a major edge, and we go over all those numbers that we went over, you feel like they're going to hit that revenue, they're going to get a hold of their R&D expenses and all that, then the intrinsic value for you would be $192. And it might be the case that someone who's a professional game developer, they've used this, and I try to use it just for a few minutes, but maybe they've been using it for 10, 20 years, not particularly Unity, but this, and they're saying that Unity is a game changer. They totally believe it. They don't think that anyone can match with them. Then maybe a person like that, they have that conviction and they're okay with the ups and downs that's going to happen over the next year. And that person might just buy it. And if it drops $20 below where they got in, they don't care, because in 5 years, they feel like they're going to be profitable. This is a growth investor. This is a person that has a thesis. This is a person that has an idea. It's just like if you look at it this way, let's say you invested in Google, Tesla, Apple, or whatever when they were $30. Do you really care if you got in when it was 30 versus if you looked at it when it was at 50 and a person is telling you that it's not worth $50, and it's possible that when you do the evaluation it's worth 30, but you got in at 50 and you're like, look, I don't care. I know in 10 years, like now, it's hundreds and hundreds of dollars, and Google's and Amazon, and they're thousands of dollars. So those types of stocks, it might, if you have that type of conviction in it, and I'm not saying there's nothing wrong with it. I'm saying I don't have it. I just think intrinsic value for me, this is a $90 company. $90 share is the most that I would say it's worth, and I would get in below 80. But if you see here, look, it went as high. It's possible to drop. It went here as high as $175, and then over from the beginning of the year to like May, it dropped all the way to $76. So what caused the drop? There was an article here. Facebook's not only one worried about Apple's privacy changes. With Apple's privacy change, they were worried that Unity wouldn't be able to make money the same way they made in the past. Since this ad, it started to recover. That's all it takes. I mean, I only brought that as an example. So the point is if you have a target, if you have a number that you feel you will feel more comfortable getting in, stick to that number. And if that number never comes and you miss it, then you're not losing any money. But if that number hits, then you get in, and then there's going to be a lot of upside. So for me, if it drops like in this area here, in this 85 area, then I would consider getting in. I would hold it, and I would see, I would definitely keep an eye on it. And that concludes my video. Thank you for joining me. Please don't forget to subscribe, hit the like and comment, and see you on the next video.